Before we wrap up, let's turn it back over to Adam Myers. We'll share some stories of theft and loss in the world of crypto exchanges and why this investment area is more like, let's call it the early days of the Wild Wild West, and less likely like the early days of the internet.
Thanks, Ian. Let's get into some issues with cryptocurrency in the past. In 2019, the CEO of the Canadian exchange Quadriga died, leaving the company scrambling to figure out how to access the $145 million of cryptocurrency held by the company. Many of the cryptocurrencies held by the Quadriga exchange were in cold wallets and offline storage designed to keep it safe from hackers. Quadriga's CEO, Gerald Cotton, was the only one with the passwords to these wallets. When he passed away at the age of 30 from complications from Crohn's disease, the company tried everything to recover the passwords, including hiring hackers to gain access to Cotton's laptop. Because of the size of the theft, they had to be granted creditor protection in the Nova Scotia Supreme Court. Another example, in 2018, South Korea's CoinRail announced it had been targeted by cyber thieves, and that breach resulted in about 30% of its cryptocurrency being stolen. The exchange did not disclose the dollar amount being stolen. But this caused the crypto market to plummet, with approximately $30 billion in cryptocurrency to be wiped out in 7 hours of trading. Anyone who has followed cryptocurrency or financials in general have heard of the failure of Mt. Gox. Mt. Gox was a Bitcoin exchange based in Tokyo, and at its peak was handling nearly 70% of the Bitcoin transactions worldwide. Its short life started in 2010 and ended in liquidation by 2014. Those 4 years were a tumultuous time for the exchange, with the absolute lack of security protocols allowing for thieves to run away with about $450 million worth of Bitcoin. None of these compare to the $530 million crypto heist that happened in January of 2018. Coincheck, the self-described leading Bitcoin and cryptocurrency exchange in Asia, was the victim of yet another cyber heist. Coincheck apologized profusely after the theft and promised to partially refund the 260,000 cryptocurrency investors, but had to use its own funds to do so. And the company was only able to cover about 80% of those losses to those investors. And there are dozens more examples. In 2017, South Korean Bitcoin exchange Ubit filed for bankruptcy after being hacked twice by cybercriminals. Also in 2017, NiceHash, a Slovenian digital currency trading platform, was robbed of $70 million worth of Bitcoin. When leaving cryptocurrency assets on exchanges where you do not frequently trade, you do so at your own peril and risk. A crypto exchange is not a bank, which by nature is interested in the security of your assets and alerts you about any danger that has arisen as soon as possible. Unlike banks, exchanges will not spend huge amounts of resources on such efforts. Some of the best options are to set up hot or cold wallets. Hot wallets being connected to the internet do face the potential of being hacked, but also have the convenience of being used to facilitate basic transactions. Just ensure you set a good private key, save your seed phrase, and set up two-factor authentication. And keep that information written in a safe place so that your loved ones can access it in the event of a worst-case scenario.